Welcome to the Global Issues Daily. In today's explainer, we're unpacking a moment in modern economic history that literally redefined global wealth. Let's step onto the floor of the NASDAQ Stock Exchange on the morning of June 12, 2026. A company called SpaceX begins trading its IPO. But within the very first second of the market opening, something unprecedented happens. The owner, Elon Musk, is officially minted as the world's first trillionaire. But what are the actual mechanics behind a valuation of this magnitude? Today, we're going to objectively examine the claims made in our source material, deconstructing the market psychology, the financial strategies, and the alleged political ecosystems that made this historic milestone possible.
Okay, so let's try to wrap our heads around this incomprehensible scale. The word trillion gets thrown around a lot in economics, but our brains aren't really wired to process a number with 12 zeros. To put this into perspective, if you were to spend $1 million every single day, it would take you over 2,700 years to exhaust $1 trillion. We're looking at a concentration of individual wealth that eclipses the gross domestic product of most nations on Earth.
And if we map this onto time, it gets even more staggering. Going back a million seconds, that takes you back about 11 and a half days. A billion seconds takes you back 32 years. But if you were to rewind the clock 1 trillion seconds, you'd find yourself 31,000 years in the past. That is an era long before human civilization or agriculture even began. This is the sheer magnitude of the wealth we're analyzing today.
Here is our roadmap for today's explainer. First, the trillion-dollar milestone. Second, fundamentals versus the hype. Third, the billionaire tax playbook. Fourth, the political nexus. And finally, the global wealth divide.
Section 1, the trillion-dollar milestone, a market anomaly. To really grasp this milestone, we have to clarify what this wealth actually is. It's inherently tied to paper. Specifically, it's shares in SpaceX valued by the market at $2.2 trillion and Tesla at over $1 trillion. His actual liquid cash reality is startlingly small, making up only about 0.1% of his net worth. That's roughly $1 billion. The rest? Entirely paper wealth. Our source emphasizes a really critical market mechanism here. He can't simply sell these shares to get cash. If a major shareholder were to suddenly flood the market with billions of dollars in stock, it would trigger massive market panic. Investors would assume something was terribly wrong with the company, leading to a catastrophic crash in the share price. So this wealth is effectively trapped on a screen, dependent entirely on market perception.
Section 2, fundamentals versus the hype. Evaluating market psychology. So, if this wealth relies on market perception, we have to ask, is a $2 trillion valuation for SpaceX actually justified by real-world performance? Consider this stark contrast between market hype and financial reality. The market values SpaceX at $2.2 trillion, yet the research firm Morningstar estimates its actual value is closer to $780 billion. Furthermore, the company recorded a massive net loss of $5 billion in 2025 and another $4.28 billion loss in just the first quarter of 2026. This massive disconnect really suggests that investors aren't buying the current balance sheet, they're buying something else entirely. To make sense of this, economist Burton Malkiel outlines two frameworks for stock valuation. First, there's the firm foundation theory, where a stock's value is rooted in cold, hard fundamentals, revenue, production, actual profit. Then there's the castles in the air theory, where stock value is completely decoupled from performance and driven instead by psychological hype and the promise of the future. The argument presented here is that Musk's corporate empire operates almost entirely on this castles in the air model, functioning as what some Harvard Business School professors describe as a financial cult.
And this narrative, well, it builds over a distinct timeline. There's a clear pattern of grand, futuristic promises. Back in 2013, the Hyperloop concept was pitched to revolutionize transport, but it wound up shuttered by 2023. In 2014, humans were supposed to be on Mars within 10 to 12 years. In 2015, fully autonomous driving was promised within 3 years. And in 2019, 1 million robotaxis were supposed to be on the road by 2020. The source argues it is exactly these ambitious, unfulfilled technological promises that investors are actually buying into, rather than functional, profitable products today.
This sentiment is captured perfectly by financial investor Steve Eisman, famous for predicting the 2008 economic crisis. Reacting to the SpaceX IPO, he stated, "This is an IPO of a sci-fi story, tailor-made for a sci-fi cult. to infinity and beyond, or in this case, to Mars. It really underscores the profound skepticism financial critics maintain regarding these astronomically high, narrative-driven market valuations.
Section 3. The Billionaire Tax Playbook. Leveraging Paper Wealth. Now, you might be wondering, if billionaires have so little liquid cash, how on earth do they fund their lifestyles? The answer is a legally sound 3-step strategy widely recognized in financial circles as buy, borrow, die. Step 1. Hold vast amounts of appreciating stock. Never sell it, because selling triggers massive capital gains taxes. Step 2. Borrow. Use those shares as collateral to secure massive, low-interest bank loans to fund your lifestyle. Since they're loans, they aren't considered taxable income. Step 3. Die. Under current U.S. tax rules, when those highly appreciated assets are passed to heirs, capital gains taxes are often heavily minimized or avoided entirely.
Let's look at a concrete example of this borrowing tactic in action. Think back to the 2022 acquisition of Twitter. Musk didn't simply sell off stock and pay the resulting taxes to buy the platform. Instead, he mortgaged approximately $62.5 billion worth of Tesla shares as collateral to secure a $12.5 billion bank loan. He received the liquid cash he needed, retained his stock, and entirely bypassed the massive tax event that a traditional sale would have triggered.
And this brilliantly illustrates the systemic disparity that comes from these mechanisms. Looking at the data from 2014 to 2018, an average US working class citizen paid roughly 25% in income taxes. By contrast, the top 25 US billionaires paid an effective rate of just 3.4%. Elon Musk's rate during that time was reported at merely 3.2%. By taking loans instead of salaries or selling stock, the ultra-wealthy are legally sidestepping the tax burdens shouldered by the general public.
Section 4. The Political Nexus. Lobbying and Legislation.
Moving on to the political nexus. Our source material argues that maintaining an empire of this size basically requires a symbiotic relationship with political power. It's alleged that Musk made heavy political investments, including a reported $290 million donation to Donald Trump's 2024 presidential campaign. Following the election, Musk's net worth increased 5-fold, and he reportedly assumed an unprecedented advisory role, attending cabinet meetings and international state visits. Furthermore, approximately 40 prior legal investigations and SEC cases against his companies were dropped under the new administration.
And there are massive international ramifications stemming from this political nexus too. Following direct diplomatic meetings between US and Indian leadership in early 2025, Starlink was rapidly granted a letter of intent to operate in India. Notably, this approval came after 2 crucial national security conditions that had previously stalled the deal were just removed outright.
But honestly, perhaps the most significant regulatory claims from the source involve domestic waivers granted right before that SpaceX IPO. NASDAQ allegedly created a specific fast entry rule, reducing the traditional vetting period to just 15 days, which caused millions in US retirement funds to automatically invest in the company. The SEC also allegedly waived a crucial rule just 2 days prior to the IPO, excusing brokers from safeguarding $70 billion of customer funds. Concurrently, the FCC reportedly granted Starlink control over 10,300 low Earth orbit satellites. Critics argue this represents an absolutely unprecedented rewriting of the rules to facilitate the trillion-dollar valuation.
Section 5. The Global Wealth Divide, the Opportunity Cost of Trillions.
Zooming out to look at the macro impact of all this, I want you to consider this figure: $40 billion. According to data from the United Nations World Food Program, this is the total annual cost required to completely eliminate world hunger by the year 2030. When juxtaposed against a net worth of $1 trillion, this monumental, world-changing sum is merely a fraction of the paper wealth held by just one individual. To put that into even more context, Oxfam estimates that a theoretical 10% tax levied on this trillion-dollar fortune wouldn't just be a drop in the bucket, it could directly lift 800 million people globally out of extreme poverty. The source points out a really stark contrast here. When the UN previously provided a detailed roadmap for how a fraction of billionaire wealth could literally save millions from starvation, the proposal just didn't gain traction. So as we wrap up this explainer, we're left with a really vital question that summarizes everything we've looked at today. If a trillion-dollar fortune is indeed built less on fundamental product profitability and more on a fragile foundation of psychological market hype, strategic tax avoidance, and unprecedented political favors,
who truly pays the price for the world's first trillionaire? It's a highly complex intersection of capitalism, politics, and global equity that continues to define our modern era. Thank you for joining us on this edition of the Global Issues Daily. Let us know what you think of this analysis in the comments below. Make sure to hit that subscribe button and leave a like, and keep questioning the systems around you.